Good morning, everyone, and welcome to Nadex Morning Analysis. It is Monday, March 1st. I cannot believe I just said that. We're already in March.
I think there's no groundhog today, right? Because the last time the groundhog came, I got like a week and a half, 2 weeks of snow. So he's not going for round 2 today, is he?
I sure hope not. I sure hope not. I can't believe
you've been under the last month, so hopefully he's not there either.
I think we actually have daylight savings time coming up.
We do, but it's spring, so we lose an hour of sleep. This is the one that nobody likes.
That's exactly. I think we should do that and then stop changing it. Period. So I'd be okay with that.
Yeah.
All right. My name is Todd Rich. I'm with Nadex. With me today, as always, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I go through some hot spots to be looking at today and the rest of the week in the markets, I do need to share our disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So I think here's what we're going to talk about today. There are some things moving. Today, though, I think we're going to stick to commodities and equities for the most part. I think gold is an interesting story just because it has been relatively volatile. And then U.S. equities were up about 1% across the board in the U.S. And then I know we've got some things coming up later this week in oil. So, Brian, you want to kick us off? A good start. Let's just start with a quick chat about gold.
Yeah. I mean, I was going to say there's a lot of different things going on right now. We were talking last Friday about the $1.9 trillion stimulus package coming in. It didn't come in Friday like we had assumed that it would. It actually took till Sunday morning, so now it's going to the Senate, which again, as everybody knows, there's no way to stop it in the Senate. It can go fully in. It was actually a lot closer of a vote than I thought it was going to be. Doesn't matter. I mean, it's not, if it's one over, that's all that matters. Gone to the next house. That obviously had a little bit of effect on gold. It actually did not provide as many gaps as we had originally thought. It gave oil a little bit of a perk. It gave gold a little bit of a perk, and the indices a little bit of a perk as well across the board. Now, overall, there was one other update that I would like to. J&J's vaccine has gotten in. The CDC director signs off on the single shot J&J. Very good news. Again, we're seeing that pretty much across the board that the distribution has been very, very slow of COVID. Or the COVID vaccinations. Having a third partner out there being able to produce and get vaccines out, definitely something that is, again, positive for the market. I did read something this $1 trillion was actually considered on the big side. And it was interesting, the article I read was talking about in 2009 when we were trying to recover there, they're tying the slow recovery back to not enough money in a stimulus. So they're admitting that this one is big. It'll be interesting to see kind of how it labels out. And again, I think gold is going to be a big player. Now, one other news real quick is manufacturing in China actually came in lower than expected. Again, Chinese numbers you get a grain of salt, but when they have something like this that's negative, especially on the manufacturing front, it shows that they are not going back as fast as, the economy's not going back to full speed as fast as they would have hoped. Again, just one thing to kind of keep out there. Now, today, the news we have ISM manufacturing, kind of U.S. numbers. Again, we're well above the 58, but again, we're really looking for a positive number here. That will definitely help out the indices overall today. If it's negative, it may make it a little bit kind of funky. And then later tonight, we have Australia data. So going across with all that and looking at gold. Gold is basically sitting exactly where it was on Friday, right? Here's where the gap is over the Friday. You can see that there's a little bit of a hole sitting right in here. Hey, you guys should be able to see the crosshair. I can see it on my screen.
Yeah.
And all it is, again, $1.9 trillion. It went to the next step. Let's get it out there. Boom, it drove straight up again. And what did it do? Again, we had a parabolic move down on Friday. Okay. We're always looking for retraces here. It came back down, it retested the gap, and ended up going right back up to where the sellers were, stepped in and pushed back down. So it's sitting right now approximately at 1736. We do have the two levels, and let me actually bring it back out to an hourly so you can see it a little bit. These are the two levels that we marked off as potential reversal areas on Friday. And again, you can see the first one is what held. We didn't need to get one, but just be aware that we do have two levels down here right below. And again, any talk about printing more money or additional stimulus or easing or any of these things, I mean, basically the only thing that really hurts gold is really, really kind of raising the interest rates, which we've kind of heard a little bit of talk about that now. But, I would say that, again, it is Monday. Monday is a great day to start looking at knockouts and kind of maybe weekly call spreads for this one. We do have 2 levels of buyers right below. And again, on a 4-hour time frame, you can see that the last time we were here is a long, long time ago.
Yeah.
We're talking about, and I say a long, long time ago, I mean January 16th, 2020. So it's been a year since price of gold has been here, and you can see what we're messing with on a 4-hour basis. There's definitely some there's some thing here where we had support coming in.
Yeah, I just wanted to kind of emphasize that fact. If we take a look at, I just kind of dropped this up here. You can clearly see gold is in a downtrend. Every time there's buyers step in, thinking they can push gold higher, sellers show up. I think a lot of this does have to do with the interest rates, with the bond yields. We've been seeing a lot of changes on the bond yield. Gold does get impacted by the interest rates, and we've seen some crazy volatility in the back end of the yield curve, where it generally doesn't move at all, but we're watching it move a quarter, a third, almost a 0.5% out at the 30-year level in a day. Just total craziness. So what's going on in the bond markets is definitely having an impact over here on gold, probably more so than everything. So definitely some levels below that Brian was identifying, something to take a look at. And down there, there might be some call spreads that could be kind of interesting if gold gets down to this 1,700 level. As I don't know. Everyone's looking for gold to catch that pop in gold, but if you just take a step back, it's just an hourly chart, and you can see definitely selling pressure there. So I think we're going to leave it there with gold. Let's take a look. Equities markets, though, up across the board. Let's take a peek at maybe the S&P and the NASDAQ.
Yeah, and actually, I'll tell you, if you guys aren't familiar with that, it's basically an ETF for bonds, and you can see, we were really trending down, like Todd mentioned. And then again, there was a nice little pop up here. So again, this is this was Friday. This is what's going on. Again, if you're not sure about the bond market, again, there's a lot more to it. All right, let's switch over across the indices, and you can see kind of where we are with the ES. I'll bring this back down to like an hourly. Actually, we'll just drop it down to a 30-minute. So using this one, we mentioned last week that we had an area where we had buyers stepping in previously. 3,800 to really 37.92 was the back end, and you can see we've had some spikes back and down. I think there's a couple of in here that we need to watch out for. Right now on a 30-minute basis, you can see that we are pretty much stuck in a sideways channel. And if I just drew kind of a box over this area here, you can see we've been going top to bottom, back and forth, and it really needs some type of a catalyst to kind of get us out of that to the top side. And again, with a stimulus passing, with another COVID vaccine kind of our treatment option out there, I would say that overall, it's kind of in a place today where I feel like it could go high with all these fundamental factors out there. Looking on a technical basis, we have a little bit of hiccup here around 38.70, and then nothing really until we get up to this 30 and 15. So I would say that the situation is set. We'll see how things are kind of swayed this morning. Like I said, it's kind of it's an interest parity because we need this stimulus because everything is bad, but then we see good numbers and it's like, well, which one is it? The stimulus is great, but we need it because it's big, but then it's maybe not as bad. And we'll talk every day. It goes back and forth, and it kind of is media driven. So, for ES, I'd watch a level there. And again, I think the 3,800 is important. If I'm going to draw the curve for this one, whoops, I forgot different platform here. Go here. And remember, this kind of middle 33% is kind of the no man's land, right? Kind of sitting in there right now. So Monday morning, let's see where the retail trader takes it. Let's see where the news outlets are going to kind of sway us today. Remember, a lot of what they say, what news they feed us also helps in the indices because the news they highlight will craft that. I will say, looking at right now on a grand scheme of things, you can see that for the most part, Wall Street is being listed, or at least the Dow is being listed on daily FX. It's basically net short, but 51%. It's basically dead even. So even traders out there are kind of unsure right now of where at least the ES is going. Do you want to talk about any of the positions on this one first?
No, I wanted us to drop this over here only because we did mention this. We made light of it a little bit on Friday with our Lord of the Rings commentary that that this 3,800 level, the S&P is holding that 3,800 level. We made the joke that it's like Gandalf versus the Balrog at the bridge. You shall not pass. There are a lot of buyers. 3,800, definitely a big level. Buyers coming in. They really don't want to see the S&P push below 3,800. So if we were to, a lot of support down here, and we are kind of in no man's land. We're waiting to see what's going to happen in a half hour when the retail customer steps in. But probably an interesting way to play this today, if it starts moving around, is with the binary options. So I'll leave it at that. Let's you want to take a peek at the Nasdaq before we wrap it up with oil?
Yeah. I mean, Nasdaq has had a similar pattern. It looks like oil. Now, this one it continued to push a little bit higher. It's not as clean on the tops, but I would say, areas that I'd be watching out for on this one. Obviously, this is where we ended Friday. We have a bit of a gap position here. A little bit of a top put in, and it's an okay selling area. The way to play this at the open 15-minute chart, you could say, there could be a case made that this is where our is for this morning. And again, you always have to mark the gap off. So I would say we're kind of high. It's in an area right now. We definitely have some sellers. I would take this one back and really kind of focus on this. For the opening pushes, it's most likely going to drive us into one of these small time frame zones, whether a 15-minute or a 30-minute. ISM manufacturing it's not necessarily something that the retail traders like, but ISM is considered some of the high impact news. I would almost say that kind of see where we're at. On a 15-minute, you can see we're a little bit lower where we push. This could be setting up for a reversal today based off of news as well. So, right now, there's really no indication of what we're doing. It's flat. It's in the same exact area off this initial push. Get a little bit of a push higher, maybe at 10 o'clock if we're sitting up here at the 106. It could be interesting for a short position. And same thing, downwise, I would say, even downside targets. I would definitely say, with the way this is, if we can break through this level here, I would say that, again, look for this one to retrace back to where we were, at least Friday, down here at 19. So let me change this to so it's darker so you guys can see it. Wouldn't be surprised if we come back down and touch Friday, if it's going to be a negative. But again, the way that you would play this one, guys, is very similar to any of the other Harry Potter trades. You can draw a level here. We'll change this from green to pink. Oops, you guys can't see that one. To pink. And again, you want to make sure we go to the origin of the move. Here's technically the gap, but again, we can run it all the way down. And I believe that is well beyond our 1 to 3 risk to reward ratio. Bring this one up to right there, 3 to 1. So you can see if I turn this sideways, here's the gap from Sunday night going across. We're well within that 1 to 3. So again, push down, base, pull back up, collapse to the downside. So we'll see if we can hold that level.
All right. I know we're running out of time today, and we did start these a little earlier, but we want to give people that opportunity to go get set before the open and not butt up against it. Remember that we've got Friday. We do have some big news with the U.S. unemployment and non-farm payroll reports, so something to look forward to on Friday. There is one other thing that's going to come out on Thursday, and so let's just do this quickly. Is OPEC Plus is going to, you always take it with what they say with a grain of salt, but it sounds like they're, with oil up at $63 a barrel, I think people are expecting them to start letting some of that supply out.
Well, remember, they are doing it, but they said they waste the numbers of how much they're doing.
Right. So let's just take a quick peek at oil and see how that's setting up for this week, knowing that we've got that number coming out on Thursday.
Yeah, oil had a nice pop, as you would expect it would. I will say, with oil up here, I'm sure nobody is excited. I know, at least near me, the gas prices are now creeping up, and they're up into the 275 range. I will say I oil at 225, 210. 216, much better than 275. But again, it passed. Oil pop up. We talked last week about a level here right around 61.12. You can see actually there's a little, not hidden, but there's an area sitting right there as well. You guys can see it. It was a level of basing and a nice pop on the 30-minute, and that's exactly what we do. The very, very bottom of this is what we ran into. And we closed on Friday because the passing of the $1.9 trillion stimulus. Again, nice little, we put a base in. We had a failure to go higher this morning in the UK session. This is right here where my cursor is. I don't know if you guys can see it where I'm moving around. That's the UK session. So this was the pre kind of market. The UK session has done nothing but emotional move, the parabolic move up in the overnight, and we're exactly where we're on Friday. So I would say we're in an area where they're racing. Again, price has been here. Is it the cleanest level? No. Is it fresh? No, it's been here a bit before. But I would keep levels anywhere between this 61, really 61 and 61.20-ish area. Any type of basing over here. Again, it could be one of these, look for it to come down, look for it to kind of pop back up again. And wherever that in base is what would help establish your level of risk. And then look long today because, again, getting money out there in people's hands, they're paying things off. They're again, recovery is good for oil. And then again, OPEC likes money. Again, I think they're going to, keep the supply.
OPEC likes money. I like money too. I got to hang out with those guys.
I know,
right? So, I'm just taking a look over at some of these knockouts with the oil levels that Brian was just mentioning. If you start seeing it come down to that 61-ish level and it sort of bases and you start seeing it turn, there might be some opportunity here with some knockouts. You got to take a look where you could potentially try to take a long position in oil, knowing that your downside would be limited. But that with the knockouts could be an interesting way to play crude oil today after we had that pop of an open and then the European sell-off. That's what you see going on here, hoping that maybe when the U.S. retail trader comes in that we end up getting a little bit of a reversal off of that European session.
And remember, they haven't had a chance to respond to it yet. So.
Right. With that, Brian, is there anything else that you wanted to kind of mention quickly before we call it a day?
Yeah, say watch for tonight. Like I said, I know not everybody out there likes to trade currencies. I can't tell you guys how many opportunities are there. I have one entire, I have a group of my students. They call it the root, the kangaroo trade. 10:30 tonight. They do not expect the cash rate to change in Australia. I'm telling you right now. They mention anything about recovery, raising interest rates, the Aussie is going to be a mover. And the fact that it is a lower volume trading time, you get pretty decent moves in that one. And again, drop at those lower binaries. Look at the 2-hour binaries, 2-hour call spread. It's anything that's small. Really, you can really kind of pinpoint and target these things at night. So that's all I got.
Perfect. All right. With that, want to thank you for joining us today. If you've got any questions for Nadex, please email us, customerservice@nadex.com. We're here to help. Can't help you if you have problems or questions and you don't reach out. So please reach out to us, customerservice@nadex.com. Brian is also accessible. You can email him at support@keeptradingsimple.com. And with that, I want to thank you for joining us today. We'll be back again tomorrow morning. Hopefully you guys are okay with us starting these 15 minutes earlier, but I think it's good because it gives you an opportunity to set yourself mentally. Yeah, right. 27 minutes to get ready for the open.
I can get more coffee this time.
Perfect. All right, everyone. Good luck in the markets. We'll catch